The US dollar is higher versus all the major currency pairs. I'll look at three of those currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective in this video. So let's get started. Starting off by taking a look at the euro versus US dollar. In trading yesterday, we moved above this swing area. The swing area was defined by a number of different swing lows and swing highs going back in time. I'm outlining some of those levels through here, here. This low right here, we broke below it and moved lower through here. Then we came back up to it and trading earlier this week and last week. Found willing sellers in this area again, and in trading yesterday, what did we do? We moved above this area right through here. That should have led to higher prices. It did, but the momentum stalled right around the 1.1605 level, and we started to come back down. We tried to hold support against the high of this swing area through here for a number of different hours in trading yesterday, but then broke into the closing more in the middle of this range right through here. In trading here today, we've traded below the low of the swing area and back up and back down again, falling back below the 50% midpoint of the move down from the high price that we saw at the end of October to the low price that we saw in November. That level comes in at 1.1568, and as you can see, we dipped below that level, but could not continue the momentum down to the next target at the 100-hour moving average. The point of all this is that the buyers had their shot here. They missed, and we're back into this battle with the 61.8% retracement, the high of the swing area up here near the 1.15929, and probably the 100-hour moving average on the downside, along with the 50% retracement between 1.1559 and 1.1568. Current price is trading at 1.1576, so we're back near the low of this swing area, and the battle continues. So buyers had their shot, they missed. Sellers are trying to take their shot. They're running into some support. That is the definition of buyers and sellers battling it out. Let's take a look at the dollar versus the yen and next, and this currency pair on the 4-hour chart. We moved above the ceiling here. The ceiling area was defined by a number of different swing highs within about a 10-pip range. In trading here today, we finally broke above that area, extending up past the 154.798 level, and the most important thing is getting above the old ceiling. If I take a look at the daily chart, the 154.798 corresponds with this high right here and near this low right here. Admittedly, we traded above and below it, but it's kind of the thing that you need to hang on to, or a level that you can hang on. Here's our old highs, and this is that next target up here. And you can see that getting above that level and staying above the 154.798 level is almost as important as getting above the old highs right here. But what these old highs, this old ceiling does is now set the bar for where buyers want to show up. We're breaking to the upside. We got above that ceiling, and that's been in play for the last few weeks of trading, where the market went up, came down, went up, came down, went up, came down, and now it's making that break above that level. So that's going to be a key risk defining and bias defining level in the short term for this currency pair. Traders want to see the price stay above that level. If they can do that and get above the 798 level, opens the door for further upside momentum in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And again, we'll focus on the hourly chart for this currency pair. And what we saw in trading yesterday was a move back toward the 38.2% retracement. Recall from Monday's trade, the price moved above that 38.2% retracement. By the way, it's of this move to the downside, this trend move to the downside. But the momentum could not be sustained, and we quickly rotated back to the downside, reestablishing the 38% as resistance right here in trading again on Monday and Tuesday. Or yesterday, you came back up to that level and again found willing sellers against that level, pushing down back toward the rising 100-hour moving average in the Asian session today, where we traded above and below that moving average. We also traded above and below the 200-hour moving average, which should have sent the price lower on the break here. After all, we did test that level in trading yesterday, found support buyers pushing back up toward the 38.2, but the momentum again is not is fading a bit, and we've seen a rotation back toward that level. We're currently trading right around the level, so the sellers are still making a play, And in fact, the rise off of the failed break did come back up toward the 100-hour moving average, found willing sellers. So you can give the sellers a little bit of the advantage, but they need to get and stay below the 200-hour moving average, and then we'll look toward this level right here to open the door for further downside momentum for the pound versus US dollar. So 100-hour moving average holding the ceiling, 200-hour moving average needs to be broken to increase the bearish bias. So that's my tactical look at the three major currency pairs to kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.